Shares of Chegg, the online education platform, dropping for the second day after earnings that blew away the expectations. Let's dive into the company more in the context of how folks have been living and learning the last 6 months. Andy Brown is the Chief Financial Officer at Chegg. Andy, welcome back to the show. Appreciate you joining us.
It's good to see you all over this morning.
Thank you. Andy, so walk me through first the numbers here. For those that missed it, you guys came ahead of just about every expectation I can see, and you jumped the guidance going forward as well and increased that.
Yeah, we had a fabulous quarter, as you had mentioned. We were well ahead of what the expectations were out there. It gave us the confidence to increase our guidance for Q4 and also, which is unusual in this environment, as you're aware, we gave our initial guidance for 2021. We had the confidence to do that. So it's I guess a little bit of a head scratcher what's happened to the stock price over the last couple of days. But I suspect there's been some profit taking, as you're aware. I think we're up a little over 100% year to date, almost 140% over the last 12 months. So we're happy for people to make some profits on us, but a little bit of a head scratcher, to say the least.
Yeah, and over the 2 years, you're up 130%. The shares have had a huge run since the bottom from this year as well, up 175. This is where, it's hard not to bring in the macro conversation here, Andy, which is one about investors trying to assess what from the last 8 months carries forward into the future. Now, it seems that the community right now has found a lot of utility in the products that you offer. In terms of your growth rates, how much clarity do you have going beyond the next couple quarters? I know you were able to give that guidance, which is key. Do you know the rate at which you'll be able to grow? Can you keep up what you did over the last 3 to 6 months?
Well, it's interesting, right? The beauty of our model and the way, when you think about, typically companies, we report quarters, but in fact, the way our company runs is we're based upon the school year. And so as we've entered the fall semester, which started, middle to late August, maybe a little bit earlier this year, that dictates not just what happens in Q3 and Q4 for us, but it also gives us a very good indicator of what the first half of next year looks like. So that's why it gives us that confidence to be able to give guidance or project out a little bit further maybe than most companies can. Having said that, this trend that we've seen over the last 6 to 8 months, where students have had to utilize more online learning, we believe what that has done has accelerated what we believe was the inevitable. And we're seeing that in the data that we get back from both students and from professors. It's kind of interesting, right? Because if you think about it, institutions are fairly stodgy. They actually move fairly slowly. Mm-hmm. And what we're seeing from even the professors is that half of the professors now feel that online education is as effective as in person, and that's up from 38% in May. And what we're seeing from students now is that 68% of students are kind of expecting kind of this hybrid model where some of their education is online, and that's what we do, right? We're exclusively online, direct to the student. So we think this trend has this COVID and what's happened in COVID has fundamentally changed how education is going to be delivered. It's going to be more and more online, and we believe that benefits Chegg.
Okay, so that understanding here that there are certain ways of learning that can happen on a virtual basis means that even if we start to return back to normal, it's not going to be a binary thing where all of a sudden none of your products are in use compared to this period. Can you give me an idea what suite of products you see having the most sticking power? What do you think could be going on ad infinitum, virus, no virus going forward? What's the stickiest part of your guys' offerings?
Well, we're a subscription-based business, and inherently subscriptions are sticky, right? I mean, it's something that where you get into an auto renewal cycle. I think what we have seen, however, is that the thing that we're seeing in particular for our business is the acceleration of the international side of our business, something that we didn't pay attention to just a couple of years ago, and it's now becoming a meaningful part of our business. And what we're seeing as a result of COVID, because it's not just in the US where kids have had to go home to learn, it's across the globe. And we're one of the few, if maybe the only, online direct-to-student education platform online that people can access. So what we've fundamentally seen, which we believe is a huge growth driver for us over the next several years, is students from across the globe. We have now 190 countries that are accessing our online subscriptions. And so that's become a big, meaningful part of our business that we believe that trend continues for many, many, many years.
Andy, the international part of it, as we talked last time, an important part of that story, as well as something that I imagine requires some cost to continue to build out. As the CFO, I want to dive into some of the numbers here on the margin side as well, because while some investors might nitpick, is actually the word one analyst used who covers you guys, said investors might nitpick the idea that you're pulling forward some of that sales growth, and that seems to be a reasonable thing to assume given the unique situation. But I would imagine your team is also pushing forward a little bit of that spend as well, whereas you might have to think about spending in the future. Are you spending now too? Are you able to take advantage of this? Because if you get those expenses out of the way, I imagine a little bit more of that future top line growth might be able to make its way to the bottom line. Is that going to be the case? Do you think you can see margins expand post-COVID and going forward?
Well, absolutely. And in fact, if you take a look at our 2021 guidance, actually our EBITDA margins are 150 basis points above what we're projecting for this year. But to your point on the investments, that's where we have really leaned in this year. As we've seen the growth that we on the top line and the margin expansion, we've also leaned into incremental investments, particularly as I mentioned earlier, in the international space, where we're investing very heavily into international, making sure we've got the right systems, the right products, the right pricing internationally, and we pulled in some investments even for our domestic products. One of the things I think we talked about the last time was account sharing. And one of the things that we pulled in from 2021 was, in fact, device management on our subscriptions. And so that limits the number of devices that can access a subscription during a semester, or during a month, I should say. And so, yes, we have pulled in those investments. We do believe that puts us in a position to continue to see the type of growth we've been seeing, high growth that we've been seeing, beyond 21, going into 22, 23, and 24.
Okay, Andy, really like the conversation. Appreciate the insight into the company. As always, looking forward to continuing it in the quarters to come. Thanks a lot for being here again.
Great. Thank you very much.
Thank you, Andy Brown, Chief Financial Officer at Chegg.